Welcome to Dubai Off Plan Unplugged, the podcast where we bring clarity to your property investment journey. I'm Simon Baker, Managing Director here at House & House, and today we're diving into one of the most exciting topics for global investors, why Dubai is outshining traditional real estate hubs across the world. Joining me is a true international property expert, Stephen Leckie, with over 20 years of experience in the Dubai market and a deep understanding of what international buyers want. Stephen has helped thousands of investors make smart, informed decisions. Today we're breaking down the global market landscape, what's happening in cities like London, New York and Paris, and why investors are increasingly choosing Dubai over them. For currency strategies to lifestyle advantages and returns, we're unpacking it all. So thank you for joining me today, Stephen.
Thank you, Simon.
So first topic up for discussion is Global Market Pulse. What's happening outside of Dubai? So market slowdowns in major cities such as London, which you're probably most familiar with, maybe New York, Paris, Singapore as well. What can you tell me about those locations?
Well, I mean, if judging by the telephone conversations on Zoom calls I'm having with people who are living in the UK, and also people who are living in North America and Canada, things are not great as an investor, as a landlord, as a business owner. And for that reason, they are looking at ways of getting out of those countries, whether it's with their money, their families, or just with their property portfolios. Is it slowing down? I'm not entirely sure that it is. Is it?
In Dubai, you mean? Is it slowing down?
I'm talking about in these other countries.
Is it slowing down? I think certainly, rising interest rates.
Yeah.
I think increasing regulations is certainly scaring people off. I mean, certainly in the UK, you could probably talk to the most. They're not really incentivizing anyone to go and buy a second or a third home at the moment, are they? Nope. Increasing tax, increases in stamp duty quite recently in the UK. Certainly inhibits people potentially wanting to buy a second or third property when it is purely for investment. I think the other thing is that when for example, they won't allow you to offset your mortgage costs against your income. That makes a huge difference. It's been around for a few years now, but it makes a huge difference. If you're paying your mortgage and then you can't offset the mortgage costs, a lot of people are underwater in terms of monthly payments, and they're having to pay from their own pocket, which is something that an investment property shouldn't really be that way around, should it? Once you've put your down payment in, say 30 or 40% of the value, you'd hope that the mortgage is covered by the incoming rental on it. But if it isn't, then suddenly it takes away the incentive to buy one at all, doesn't it?
True that. Look, you've mentioned London and Paris, etc., and Singapore, but my understanding is it's almost everywhere in the world is having similar issues where the governments are having to increase the coffers to pay down debts or to provide better services for people, or in the case of some countries in Europe, increase defence spending. So they're looking at all different ways of making money. And unfortunately, it tends to be the entrepreneurs and the wealthier that are suffering the most. And the fortunate thing for Dubai is that those people are able or have the tools and the wherewithal to be more transient. And therefore they are actually able to change location.
Welcomed with open arms here, aren't they?
Whether it's to Dubai or whether it's to other countries in the world. I mean, I've seen so many podcasts recently and listened to various news stories about the amount of millionaires that are exiting UK and various other countries. And I think from that point of view, Dubai is definitely benefiting.
Yeah, I think the UK was only second to China. Well, obviously China was more people, but they've got a lot bigger population there. As a percentage, obviously the UK is far and away at the top of that list, isn't it?
Yeah.
Lots of people leaving. And I think actually, interestingly enough, I don't know if you've experienced this, but more recently, I've had friends moving here who, they didn't move 20 or 25 years ago when we did. They moved more recently and in the last, post-COVID. And it wasn't even purely a tax situation. There was lots of other factors. So we might have moved here 20 years ago because we thought, right, sunshine and lack of tax, fantastic.
Yes.
But people tend to move here now. I think they've always been paying 50% tax for these, high net worth individuals or people on big salaries. They've always been paying a lot of tax. So actually, interestingly, more recently, I've noticed, they're saying that your safety, security are probably very high up that list, as well
Definitely.
as other factors.
I can recall sort of 5-6 years ago talking to potential investors who were looking to buy to let. they had no plans to come and live here.
Yeah.
It was, they had kids at school, great schools, private schools in the UK, etc. I know you touched on this on a previous podcast with Rennie about the amount of VAT that people are having to pay on private schools. But now that's...
Well, it's another 20%, isn't it?
Exactly.
Just suddenly whacked on top.
Yeah.
Now,
So,
private schools in the UK aren't particularly cheap. I know we did a small amount of research into one that was £50,000 a year. Well, your 20% tax is another 10 grand a year on top.
It's huge.
I mean,
and by the way, you've got to earn 20 to pay that 10.
Yeah, or in terms of the 60, which was a nice school in Cheltenham, so not the most expensive, but certainly up there. And that was looking at, realistically, if you're getting taxed at 50%, to pay that 60 grand a year pounds, which is 300,000 dirhams, it's about 3 times the price as a private school would be here for secondary school.
The best private school here.
Which is about 120,000 dirhams.
Yeah.
So it's not only 3 times the price, but to earn the 300,000 dirhams or 60,000 pounds, you'd have had to earn double that. Suddenly that's looking like 600,000 dirhams is a very decent year's salary for one child to go to secondary school.
Yes.
It's quite scary, really. So what other reasons have you heard? Obviously, safety and security being a big one.
I think
economically,
it's not just safety as in but physical safety.
Yeah.
It's also safety for their money.
Yeah,
people are concerned about the amount of tax they're going to have to pay, and fully expecting things. For instance, exit taxes. I was with a fairly high net worth individual yesterday. I spent most of the day with him, and he was explaining to me that people need to be very wary in the UK, because although it doesn't happen at the moment, but other European countries are doing it, and that more will follow suit, where when you're leaving the country, you are going to get taxed quite heavily on extracting your wealth and bringing it to places like here. So if you're going to do it, 2025 may be the right time to do it.
Such as India, which is quite difficult to take your money out.
Yeah.
And they're really controlling it, which does no favours for their economy. It doesn't really do favours for anything. It doesn't do favours for the exchange rate. We're quite lucky here to be pegged to the dollar. So the dirham's been pegged to the dollar for many years, which gives a sort of level of stability from a currency perspective.
And I don't think there's any restrictions on taking money out of this country.
Not at all. No, that's what I mean. So, but as soon as countries start doing that, it's not never going to be a positive long-term view, because then everyone suddenly thinks, well, would you invest money in a country you can't take it out of? You wouldn't, would you? So,
no, true.
And hence why foreign investment and foreign trade into the UK is slowing down, because people then would be worried that, well, if they did try and tie your money up there, should we say, it's not a very attractive investment.
And that must be the same for businesses as well. People thinking, I'm going to be an entrepreneur in the UK.
Yeah.
What's the point?
And they think, unfortunate reality is lots of more normal people think, why would I work harder to get a pay rise if I'm just going to pay? I think a lot of people don't really even understand how prorated tax works. So they think, well, if I get my salary increase, I'll get paid less. It was quite a common thing I used to hear. So certainly it isn't positive, is it?
Look, the fact is that we would not be talking to anybody who's living in the UK or in Europe or in any other country in the world who absolutely loves where they live. They're happy to pay tax. We don't talk to those people. We're only talking to people who are a little upset with what's going on in wherever they are living, and they're looking for an escape, and they're looking for another lifestyle.
But there's no escaping the fact that those numbers, certainly from the UK specifically, obviously we're from the UK, they have increased significantly post-COVID. Probably a lot to do with, huge inflation, cost of living crisis at home, and the fact that it's economically and politically and all these reasons, suddenly it doesn't look so. And also,
local and government, etc., is making it incredibly difficult for you to be a landlord, for you to own property and actually make money out of it.
Yeah. And people need to, especially post-COVID, the world's had a lot of money printed. There's no shortage of money, but people need to invest it somewhere, don't they? Which brings us on to Dubai's competitive edge. So return on investment, tax, and ease of entry. Let's talk about the tax bit first. Obviously, there's no tax here at all. Is there any tax?
There's corporation tax. If you were to buy property in the name of a company, then I don't remember what's the threshold. When do you start paying tax?
Well, for a business, it's $100,000 a year of income, so it's quite higher anyway. I mean, certainly in the UK, if it's personal, I think I've got a £12,000 tax allowance per annum. So here it's $100,000, and that's for a business. I do think there's some exemptions if you have a real estate investment trust or properties in a company name. But there isn't really, talking about companies while we're on the subject, there's not really, to me, a huge benefit of owning in a company name, really, is there?
Where?
Here in Dubai.
Owning property in the name of a company.
So lots of people
you can't get a mortgage. It's almost impossible to get a mortgage.
People from the UK would expect that it's, wouldn't they? Because if you're in the UK, that's how you would always have to structure it to pay a bit less tax. Whereas here, actually, it doesn't really benefit you too much, does it?
Not really, no. And in fact, it's a disadvantage in many cases. Although it may be an advantage for your wherever you're living and to protect yourself, ring fencing, tax, etc.
I think it's very important to note that if you are living in the UK or you are a permanent resident in a country you've got to pay tax, obviously then you need a local tax advisor or an accountant to tell you, don't you? Very important to tell you where you should be paying and how much it should be, because obviously we can't really advise on that. But obviously there's no tax if you are resident in Dubai. So the smart money's moving here. They're buying a nice house to live in, or even renting one if they prefer. They're basing themselves here. They're getting golden visas and doing all these things. And they're basing themselves here from a tax perspective. And then from that basis, you can spend up to 90 days in the UK and fly all around the world in Emirates. And a lot of these people use Dubai as a hub. They don't necessarily spend all year here, do they? But they use it as a hub and a home from a tax perspective. And then they're quite free to... very centrally located, aren't you here? So.
No, in fact, I was thinking about this last night. Is the fact that one of the reasons, obviously, a lot of people come here for the lifestyle, for the tax-free status, for the safety, etc. But I think the fact is, we've got three of the best airlines in the world on our doorstep: Qatar, Etihad, and Emirates. Yeah. And that's a very big bonus for someone. I mean, yes, you can go by Ryanair and go to Spain for the weekend, but that's not an enjoyable journey. That's not a pleasurable thing to do. Whereas I think when you go on Emirates or Etihad, etc., even in economy, it's very pleasurable.
Well, certainly two of the best airlines in the world, aren't they? Yeah. And all three are probably in the top five. So
exactly.
In terms of world access, Dubai is accident of location, really, isn't it? But they're very well located, and if you want to go. Your friend Mr. Sharlin's over in Thailand at the moment, Phuket. It's a short 6-hour flight direct to Emirates. You go to Terminal 3. It's like going to a 5-star hotel, isn't it? You get on the plane and 6 hours later you get off the other end and you're in Asia. So you're very well situated here. 6 hours to most of Europe, 6 hours to Asia. Direct flights to Australia, to lots of places in America, so you're pretty much accessible.
I've got a couple of clients that I've actually become friends with who are now living in Dubai, and they use it as their travel hub. They are living their main address is here, although they probably spend 2 or 3 months of the year here. They're just traveling all around the world.
Yeah. So lots of people would say, "Oh, Dubai's too hot in the summer." And you're completely right. It is. But if you can leave for 6 months a year, then actually suddenly
go to Sri Lanka. You can go to the Far East,
Maldives in 4 hours.
Go to Spain if you want to cool down a bit. Happy days.
Lots of places. Okay, so in terms of processes, easier transactions, regulations and all that. How's transparency? Is that improved here, would you say, in the last 20 years?
I think the major thing for anybody coming here now is the ease of getting a visa. You can own your company 100% if you want to set up a company here. There are so many different free zones here that you don't have to be in a free zone anymore, but you can be in a free zone where they are concentrating on that type of business, and there is a lot of help and assistance for your business in those different free zones. That I think is a big plus. I think everything's getting so much easier. I mean, you can get a driving license now in about 12 minutes. You just do it online.
Is it all that easy?
So easy.
Well, I mean, certainly renewing your car registration. I remember 20 years ago when we first came here, there used to be lots of red tape in there. You'd take your folder with all your A4 bits of paper, and they'd usually say, "Oh, you're missing one." You go back again and go. Nowadays, you can sit on the app. You can renew your registration on there, can't you? And they send you the card a week later in the post. I mean, everything's got a lot easier from that perspective. I think
even buying property.
Tech perspective.
I tell people in the UK. They come here. You can see a property on a Monday. You can have the keys by Friday.
Yeah.
It's
very quick, isn't it?
And everything is done. You don't need solicitors getting involved. It's all being done. What is it? Blockchain is helping the government make sure that everything is done on the QT.
Well, having a central land department, certainly, for example, recently I was looking at property in the UK, and they do various searches, especially it's been around for a few hundred years, they're checking that a farmer didn't own the land before you or something. Whereas here it's quite simple. You've got a title deed, you go down to the Dubai Land Department, they'll say, "Yep, that's Stephen's house, and if you want to sell it to Simon, have you paid him the money?" and you can, as you said, you can complete that process quite quickly, and it's sort of.
I think someone did one recently in 3 days, didn't they?
Yeah, there's quite common.
Was that 24 million dirham deal in 3 days?
Yeah, if it's cash to cash, and you haven't got a mortgage, and I don't need a mortgage, we can shake hands, can't we? Sign a bit of paper, and we're gonna. I mean, in case you probably don't even need to sign a bit of paper, but you're probably better to pay a deposit, and we could go and transfer as soon as the money's there. Really, quick NOC from the developer, which is again done online. I think it's 500 dirhams, £100. You get the NOC 12 hours later from email, and you could go directly to transfer it. So that's very easy. In terms of yields here, Stephen, what would you say? Is there an average Dubai yield, or would you say?
You're the figures man. What is it? 6.9?
I think it's 6.92. I think
it's 6.92. There you go. It's the average, but essentially, everywhere in the world.
That sounds huge. I mean, if I was coming from London, I'd say, "Well, I don't believe you." It sounds like kind of over the top.
Look, there are properties here where you're only going to get 3 or 4%. It just depends on the value of the property. It is in London. If you buy the most expensive property, your yield is going to be reasonably low. Maybe your capital growth will be more. I'm not sure it's going to be more in percentage terms.
When the average is 6.9, that means that some are at 8 or 8.5 or maybe even 10. I mean,
I've got clients who are getting at least 10. I've even got clients who bought many, many years ago are getting in excess of 20.
Yeah, for sure. I mean, arguably, if you bought long enough ago, and then we like to work on the current value as well, just to be sort of fair to that equity.
Okay. Please don't come to me thinking you're going to get 20%. If you bought your Springs Villa for
500,000 dirhams and you're getting a 30% rental return, then fantastic. However, you should obviously look at opportunity cost of that money and compare it. But anyway, but no, there are some. So the average 6.92%, which sounds, almost sounds too good to be true, really, especially if you're coming anywhere inside the M25 in London, coming from, I think, as far as I'm aware, London, New York, and Paris are anywhere between 2 and 4% max.
And it's taxed.
And then it's taxed. Yeah. So in a lot of those cases, you're not even thinking about being inflation, are you? I mean, real world inflation, and when they say 6 or 7%, it's probably been more like 10% for a good few years, isn't it? With the real cost of living. Yes. I've certainly noticed the last few times you go back to the UK, things seem considerably more expensive, and it's not like 5 or 6%. It's certainly more like 10 a year, I think. So I think that's a big thing, and I think if you can get that kind of rental yield, arguably, even if you did get a slightly less in capital growth as an income producing asset, is something that, for example, if you wanted to retire on renting out a few properties, you would need a lot less property in Dubai than you would in London or New York or Paris.
I speak from experience.
So Yes. Good. Okay. Yeah. So I think arguably we like to look at helping people plan from a portfolio planning perspective, and I think that's certainly something that we talk a lot about in the new investment playbook, which is sort of an evolution of our investment guide, which we've been having running for about 4 years now, and we felt like it really needed switching up. So it's taken a few months at the start of this year to really get it right.
When's that coming out?
Document in I think the 26th of April. They promised me earlier, so hopefully it'll be done by then. So the end of this month, but that will be an ongoing thing. So it's not necessarily just this year. Obviously, the market's always evolving, but that's something that's to really try and help guide people as to, depending on their situation, if you're a first-time buyer versus all the way through to you're a seasoned investor, what you should be looking at. We're looking at, we look a lot of the data and the numbers and saying, okay, well, last year there was, for example, only 1% of the off-plan market was detached houses, independent villas. And so what to look at in the future and where your money is probably best placed depending on your situation, which obviously matters a lot.
So just to go back to the yields question, what do you tell people about? I mean, we talk about the average is 6.9.
We say to people sort of 6 to 7%. That 6.92% is a gross number. So realistically, once you take up about 15% of that off for service charges, roughly is usually about the number. So you're talking about 6, maybe even 5.5 to 6. And I think personally, I would base an investment portfolio review on a target of 6% plus, and if any property is generating you 6% on the current value, net on the current value, I would personally, I don't know about you, but I would say I'm keeping that one, thanks very much, and move on to the next. And if it's not producing that, you can ask why. I mean, maybe we could optimize the rent, we could try and make sure that they've got the latest market price, or make sure that we could either look at doing holiday rentals for them. It might be a case that the property's just, has already appreciated a lot. It's gone through that process. It might be a 10 or 15-year-old villa or townhouse. And you may well be better off releasing that equity, selling it to an end user who's probably where it should be at that stage in its life cycle, and reinvesting that money in a new property that could generate a better return. I mean, it's in essence making your client's money work a bit harder for them, really.
Unfortunately, my problem is that when I sell the property to someone and recommend it, their plan is to sell when it's completed.
Right, okay.
And then when they find out what yield they can get, or they just go, yeah, I'll take that.
Yeah.
I don't want to be bothered with selling and buying another property.
Fair enough. And actually, this is what I'm trying to say. If you're getting 8%, you've done a very good job advising them, Steve. I think they've done very well. I mean, actually, if you're getting anything over 6%, they should be adding that to a portfolio. And we should then look at it and say, holistically with them and say, well, how can we help build out more of that? If you can have a selection of 7, 8, 9% properties in terms of rental income, income producing assets, I think it's an amazing place to be. And they'll be replacing their salary with income, and they can go and sail into the sunset, hopefully, can't they? Which is the dream, I think, for most people. Moving on then, so currency fluctuations and hedging opportunities. Dollar's obviously pegged to the dirham, which is great for stability of the dirham. If it wasn't pegged as a fairly small country, it'd probably be, the exchange rate would be bouncing around all over the place. So it's great it's pegged to the dollar. Certainly when you compare to the pound, over the years, when we first moved here, it was over $2 to the pound, which equated to about 7.4 was, I think, the most it went up to, maybe slightly more.
Before, I was here a little bit earlier.
Oh, you bit early. I
based my salary negotiations for my first job at 5.
Did you? Okay, interesting.
But very shortly after that, I was way ahead of the game because I was getting paid in sterling.
Right, and the pound obviously got stronger and stronger, didn't it? And it went up. I think it peaked at $2, just over $2, 2.1.
It was about 7.4,
I think it was.
And I think euros was about 5 something.
5.5 maybe.
Yeah.
So that was when the pound was quite strong. Unfortunately, if you did, and I thought, okay, it went down slowly, didn't it? And it got to a point where it was under 5 dirhams to the pound again, which is about $1.35.
4.3, 4.4.
And then it's gone down to
Brexit. After Brexit,
it went down to 3.9 for one day.
Was it really?
One day, yeah. So it went just over 4. And I certainly used to think, well, anything under 5, after living in an environment where it was over 7, I thought anything under 5 and you'd be better off sending the money back to pounds. But actually, it hasn't necessarily improved since then. That's been the last 5 years. And more recently, I think 2 weeks ago, it was 4.5 dirhams to the pound.
That's about 4.8
it's gone
now,
back to 4.8 today, or back down to 4.6 today. I've been looking at sending some money, so I've been following it. But it's interesting, isn't it? And I think actually I only realised this when I look back and I looked at a 100-year history of pound versus dollar, and 100 years ago it was $5 to the pound, and it's now 1.2, which is quite an interesting view on it. So I think when you look at a short term.
So what does that mean? What does that mean if I'm buying property with sterling or with euros?
With sterling, arguably it's a lot lower than it has been. But the thing is, if that's a 100-year trend, and I'm not convinced the pound's necessarily going to get much stronger. I think to have a strong pound, you need a strong economy, and it doesn't feel like that's the way it's going at the moment. Yeah. So having having arguably a bit of a diversified portfolio is not necessarily a bad idea, is it? If you're only in the UK and you're only exposed to pounds, and the pound potentially, I was discussing with someone that we thought that the pound would end up about equal to the dollar within the next 10 years, which I'd be struggling to see it go the other way. So if it does go that way, your pounds effectively could lose another 25% of its value. So having something in dollars, whether it's cash in the bank in dollars or dollar investments in shares or bonds or real estate that's pegged to the dollar, would certainly be a bit of a hedge against the unfortunate reality that the pound has probably been losing value for many years, and over long periods of time seems to lose more value.
To stop sending money home?
Well, no, I think for you or the other way around. So your hedge is probably to have a bit of both. I mean, we can't ever predict the future, can we? So I think having some money in dollars and some money in pounds, if you're from the UK and you might spend some time there in the future, is probably not necessarily a bad idea. All I mean is at the moment it seems attractive to send money to pounds, but actually you might look at it in hindsight's a wonderful thing. You might look at it in 10 years and say that 4.5 was quite a good rate to be sending it from pounds to dollars, right?
Sure.
So
I mean, one of the things that you should remember, and certainly people I talk to, is that you are actually able to book this. If you think the dollar, sterling, or any other currency that you're comparing it to, you can actually book this. And if you're buying an off-plan property, I think you can book a year in advance.
Is it a year? Maybe it's 2. It used to be a year.
Probably a year in advance.
You have to pay a 10% deposit, and you are booking that trade. So it's not messing around. It's not a case of you are booking it, and you'd have to pay any difference you would have to pay. As in if it, a bit like any kind of financial trade. But you pay 10% deposit, and it does mean if you're buying a property currency and you thought, oh God, my pounds are going to get weaker and weaker and weaker, you didn't want to send all the money to a dirham or a dollar account now. You could book those trades for up to a year in advance. So at least you've secured that lending. For example, when it was up at 4.8 the other day, suddenly I thought that actually seemed like quite a good rate to send money from pounds to dirhams if you so needed it. It's always very hard. I wouldn't start being a currency trader here. I certainly I'm not.
No, but if you're buying a property, and you can get
some on both sides of the pond is not necessarily a bad idea, really.
But fluctuations meaning you can make 10 or 15% on your property. It makes
quite a big difference. I mean, I as I said, I did a trade at 4.5, and then now it's 4.8. Well, that's 6%, something like that, isn't it?
That's a year's yield.
It's a 6% difference.
Yield,
it's a year's rental yield, and if it's quite a lot of money, it makes quite a big difference in pounds and pence, I'm afraid. So, okay. So there you go. So that's in terms of booking currency, right? Lifestyle, infrastructure, and long-term appeal. So we all know lifestyle in Dubai. I'm not sure we need to go on about that too much. I think the lifestyle here is pretty obvious, and what you can.
I think at the present moment, I think a lot of people walking around Dubai are feeling rather smug, in that we feel very safe.
Yeah,
we are not paying any tax. The weather's always good. And we can have a barbecue in 4 months' time, and we know it's going to be,
which is quite satisfying, isn't it? Whereas back at home, you sometimes think, well, we could plan one, but we might have to stand in the garage or something.
Exactly. I mean, our life isn't all barbecues, by the way. But
I don't know. We have quite a few, I think. But
maybe you do.
But but I think
it's not a good idea on the balcony.
No, true. On your balcony is probably a little more dangerous. but you're completely right in terms of, obviously it gets very hot in the summer, but then you've got luxuries like if you want to, sounds a bit of a Dubai thing, but you've got chilled swimming pools, and you can go to a nice 5-star hotel, can't you, and go and sit in a pool bar in the middle of summer and actually probably feel quite cool in the water. So I think in terms of lifestyle, it's obviously up there with the probably the most luxurious cities in the world. So. In terms of infrastructure for me is a big one here, because that's really important, isn't it? They want to double the population, you want to double the amount, we want to add 1 million homes in the next 15 years. Infrastructure is important.
They're not going to be able to do that, though, are they? 1 million homes in 15
Well, I mean,
years.
if you want another 4 million people, there's another 1 million homes in it. So, I mean, that's the real number. So when people talk about oversupply, they're completely right. In a year or two, there are probably going to be slightly too many units come to the market for a period of 1 or 2 years. However, if you want to double the population, you need 4 million people. That's 1 million homes.
I don't believe it. I'm not sure that there's going to be oversupply. I think there's going to be oversupply of certain units.
Okay,
these developments that are being churned out at the moment by some of the second-rate developers.
Smaller private developers.
No, not even smaller private ones. Some of the big ones that we don't really like are producing buildings
with thousands of units in.
Thousands of studios.
Exactly.
I mean, it doesn't make any sense to me at all. And when people talk about oversupply on the phone to me or in Zoom calls, I just tell them, look, these developers are producing buildings.
But playing devil's advocate, wouldn't that would affect the wider market if if there are too many units, the rental prices come down for those apartments. Of course, it affects in a micro market, those units.
Yes.
But in the wider market, if I said to you, well, you can go to that building and it's half the price, you might consider it, right?
Probably not.
No, maybe not. Maybe not.
I've been spoiled.
I'm staying put.
No, exactly. I've been spoiled on quality and facilities and location, and the developer is incredibly important to me.
Yeah.
And living in a good quality apartment or villa, I think makes a hell of a lot of difference.
I think when you've touched on
don't want the problems.
The size of the property, which I'm sure you'll agree with, because some of these new ones getting a bit smaller.
Yeah.
Yeah, what do you think?
I'm from London, so I don't know.
Fine, but people are people here are used to a nice, aren't they? A big one bed, 800-900 square foot. So if they were 600, they're probably suddenly maybe they'll suffer when it comes to end users and tenants. I don't know.
We'll see.
But going back to infrastructure, though,
roads. You're talking about roads,
trams, metros.
Yeah,
Dubai pretty good at building a road. Yeah. What do you reckon?
I'm from London, and I've lived in various cities in the world in my day, and I don't know that there's such a big problem with traffic. Yes, My journey home at the moment is good, but I know also that after the summer, it will get bad again, and it takes time. But
when you say after the summer, what do you mean by that specifically?
Well, at the moment, it's quite good because Eid has just finished.
Right.
Ramadan, it's been very quiet. Then Eid, I think people are still away. And I think during the summer months, a lot of people are travelling.
Yeah, but then after the summer, maybe there's more people moving here.
Exactly.
September's a big influx,
Exactly.
isn't it? I've got friends who are moving here this August.
Yeah.
They've talked about it. I think this is the other interesting thing, is going a little bit off track from the infrastructure, but they've talked about moving here for about 5 or 6 years now.
Really? Where are they coming from?
Kids and stuff. They're coming from Birmingham. They've got kids, and then they've got some kids in the UK a bit older, and they've got a younger child that's coming with them. But they've thought about it for a long time. So when they do move here, it's not like how we came. It wasn't in 2005 or you came 2004. Did you?
I didn't even know where Dubai was.
Nor did I. Yeah,
2003.
We turned up 2003. There you go. They'd only just created the freehold law when Stephen arrived. But we didn't come with a view. We came with a view that we thought, wow, we'll try it out, didn't we? Yeah. And if you thought it was terrible, you would have gone back to Israel. Yes. These people have been coming here 3 or 4 times a year for 10 years, and they've taken 5 or 6 years to decide to move here. Now they're moving here. They aren't going back in a hurry. They'll be here for at least a decade, I think, maybe even a lot longer. So these are the kind of, I think that's where the demographic shift is that people really need to understand. Is that we came here, didn't we, for the sunshine and run around in the sunshine, not pay any tax and have some fun. Whereas people have moved here now much more for a long-term family commitment. They're buying a house. They're going to be here for the mid to long term.
You are actually a good example of that. I mean, you met your wife here. You've got kids here,
children, and
you've got a house.
So now you're sort of stuck here and you can't go away. So there we go. So I better not say that.
Rachel will feel like that.
I'm sure she doesn't. But that's the reality, though, isn't it? It's a lot hard. Once you've got family and roots here, you don't make a knee-jerk reaction to go, I'm going to leave Dubai because I lost my job. I remember 10 years ago, I'm sure you've heard this, 10 or 15, 20 years ago, people said, if I lose my job, I'll leave.
Yeah.
Well, hang on a second, this is their home now. They're not leaving. They're going to find another job here. Yeah. Your contacts are far better here than they would be if I went back to London. I'd be buggered and I wouldn't give any a job from there.
What have you been doing? I've been in Dubai in the sun for the last 20 years.
Good luck. Yeah.
We've got no chance.
So I think this is where the whole shift is. And I think that the idea that people are moving here for the long term is a really, really important one.
Okay, infrastructure. Let's just quickly cover
infrastructure. Well, infrastructure is very, very good here, isn't it? They build roads very fast. Yes, the traffic's bad, but they've just added 200,000 people in the last year. So of course it's bad. Yeah. They build roads here faster than you driving down Sakim Road more recently, which is why I live in Raven Ranches. And every day it changes. I mean, almost daily they're adding, there's a bit more concrete and it will get better. And within 6 months, before you know it, there'll suddenly be a new interchange gone in. They've been talking about changing Hammersmith flyover for about 40 years, apparently. So so it's interesting, isn't it, how fast they make things here. Okay, right, international buyer mindset in 2025. The shift in buyer behaviour post-pandemic. So that's a big one that we've talked about a lot, and we've probably had lots of podcasts and things said about that.
Well, we've already touched on it, and just in our discussions earlier, is the fact that people are now moving. It's generations are moving. The entire families. It's bringing their parents over, bringing their grandkids, etc., whatever it is, and they're coming here. They're selling up wherever they are in the world, and they are moving everything here. And again, I only speak to people who are unhappy, and that's why they're coming to live here, and they're looking for a change of lifestyle, and they're looking for business opportunities, maybe employment opportunities as well. So they're coming to somewhere here, and I think everybody mentions it's COVID. Is it all about COVID? I think COVID probably taught us that we need outdoor space, so community is always very important. Buildings with lots of lovely facilities, so you don't have to leave the building, are important, yes, but I don't know that that's the only reason. Do you think there was a mentality shift, though, that if you were maybe living in London and you thought, you know what, life's too short for the rat race, maybe that was a bit of a shift that definitely pushed people. Well, people discovered they could work from home.
And actually discovered you work from home. Yeah. You've got these, I forget what they're called, Tuesdays, Wednesdays and Thursdays are probably not, I can't say that on the podcast, but they're Tuesdays, Wednesdays and Thursdays. And London, for the other 4 days a week, these office buildings are completely empty.
Yeah.
And I was shocked, they've got these hundreds of millions of pounds worth of real estate that's empty for 4 days a week because everyone wanted to work from home.
But interestingly, people aren't working from home here. No. Commercial property is very much in demand.
And actually probably quite a shrewd investment to look at in the next 12 to 18 months. I think as the population booms, the first primary thought is residential, but actually prime office space, if you are a serious investor looking at, and you probably need to be looking at a floor size, don't you? You need to be looking at, £3 or £4 million or something. But if you are in that market, then actually I think that probably could be for both rental income and potential capital growth. There's some really prime. I was speaking recently to one developer that we work with a lot, and they've got a building on Shakeside Road. Recently they've been made freehold, haven't they? So they've got a building there that is half residential and half commercial. So there's a few there that are quite interesting.
A lot of these developers now who are selling commercial are only selling bulk. They won't sell individual
units. Well, it makes sense, because I suppose big companies, if we wanted to go and rent a space, it's a nice idea that you rent a sort of 1,000 square foot, but the reality is we probably need a bit more than that.
Funny enough, I went to a restaurant on the weekend, and they just they were dealing with 3 different landlords to open this restaurant.
Amazing, yeah. Imagine,
It's mad.
In some places you wouldn't have a choice, but in a simple world, you'd like a whole floor. 10 or 12,000 square foot. It's probably going to be 25 million. So it might even be as much as like 4 or 5 million pounds. It's quite a big investment. But then there's been things recently. We've had, some good contacts in world of corporate finance and stuff, which has actually opened a lot of doors for international buyers to be able to get some leverage and get 50, 60, maybe even 70%, provided they can show that's an income producing asset. So
true that.
I think that's quite an interesting one as well. Okay, so
lifestyle investors.
Lifestyle investors. Okay, yeah, versus pure ROI. So would you say that 20 years ago people were very no one was buying to live in, were they? They were
buying to flip.
And they'd want to flip it a week later or 2 weeks later or something.
Didn't we all?
Yeah. And sometimes it worked, and then and then at one point at the end of 2008 it stopped working, didn't it? Good. Okay, so would you say lifestyle investors? That's probably a bit of a loose term, isn't it? But people who are looking for somewhere purely for their family to live, they're probably less analytical on exactly the price, and they're more, certainly ones coming from London. My friend said, oh, well, everyone says Dubai is expensive, but I've just sold my house in London, and I think it's quite cheap.
I spoke to a guy the other day, come from Hong Kong.
Yeah, so
he's 25% cheaper here. For what he's looking for comparable property.
I'm sure even a lot more than that.
Guy from Monaco, last week, again, similar conversation.
You could probably buy a villa here for the price of a small flat in Monaco or Hong Kong or even prime central London. So actually, for those people, it looks like quite good value. So I guess they're probably less analytical on, it's not getting 6% anymore, it's only getting 5.5%. And they'll probably think, well, actually, it's...
What do you think all these lovely branded properties that you can buy into, these hospitality branded properties, that's a hell of a lifestyle decision. And
so I think there's probably a lot better than what you would get in those established older sort of European cities, isn't it? In terms of facilities, like we take it for granted, don't we? But you see some of these huge infinity swimming pools hanging off the edge of, over the edge of the Dubai water canal and things, and you think, wow, what amazing facilities. So where else are we at now?
Future demand from key markets. Go on.
Well, I don't see it slowing down, Stephen, to be honest with you, in terms of that future demand. I think, unless economically and politically a lot of these European countries and cities get their act together, I can't see people, as I just said to you, I think, I've had friends who've taken 4 or 5 years to make a decision. Now, if it's only recently got bad, some of these families can't move in 6 or 12 months. They need a few years. So I think actually, and once they've got something in their head, like most people who are probably a bit stubborn, I certainly know I'm a bit that way, that once you've made a decision, you think, well, I'm going to stick to that. So if they're thinking about it now, it may well have a huge surge of population increase here in 26 or even 27.
I agree. Well, again, we're talking to people who are buying off-plan property in which they plan to live, and they know it's not going to be ready for 3 or 4 years.
So that takes us all the way to what, 28, is it?
28, 29 now.
Yeah. So suddenly, before we know it, this D33 economic agenda, which we used to feel was a 10-year plan, wasn't it, from 2023 to 2033, and felt like a far away, suddenly it feels quite close, doesn't it?
Very
Time
close.
goes scarily fast, doesn't it?
It does in Dubai.
Okay, very good. So what are your any final thoughts, predictions, Stephen, from all, we've covered a lot of ground there, I think. So is there anything that you feel like there's going to be to look out for in 2025?
I think obviously we're always talking about buying villas. I think there's still some very good opportunities for investors who are looking for yields off plan. Again, I think you need to be careful about who you're buying from and where you're, not necessarily the location, but much more about who the developer is and what the makeup of that building is. That's so important at the moment, because I think there is a slight risk of some oversupply coming on. And I know what you're saying about, maybe that's going to affect the whole market when you've looking at the average, rental for a 1-bedroom or studio. But look, just be aware that the demographics are changing all the time in Dubai. The demand is changing, and as I've always said, do not underestimate the way that Dubai is moving forward, because if there is any small downsize, or what do you call it, sort of dip or whatever.
I don't ever see it being a huge. I think when the demand is strong, it's hard to see there being a crash, isn't there? It's more of a bit of a softening of prices in certain areas. I think you've already touched on that, and maybe softening of rental prices, which in a way, arguably, that would in itself be okay, because actually, if it helps young professionals be able to move, your JVC that we talked about, for example, there's a lot of supply coming there. You can't hide from that. So it is what it is. However, that's the kind of location that lots of young professionals like to live. Now, if the rental prices soften off 20 or 25%, that could in turn potentially lead to a lot more people moving to Dubai, which would help it recover that slowdown, wouldn't it? So I think that's probably a good way to wrap us up from there. I think you're completely right in terms of the supply of certainly houses, because of that sheer demand from families wanting to move here. And in a perfect world, I think most families would prefer a house of some description, whether a detached house or a townhouse, a terraced house, if you're listening from the UK. And I think that's, with a garden of some description, I think that's probably the first port of call for people. So I think, and there's a lot less units in that segment, aren't there? So I can see that continuing. I think that wraps up for today. A huge thank you to Stephen for joining. If you're an international investor looking to make your next smart move, or even your first, Dubai offers opportunity, stability, and lifestyle like nowhere else. So thanks again, Stephen. Thank you so much for joining us.
Thank you.
Until next time, we'll see you soon.
Brilliant.